Apple stock is down 10% year to date, and we're seeing the shares go even lower in the after hours after the company reported their Q2 earnings after the bell. We'll go through them and we'll talk about all of that on today's show. What is going on, investors? Hopefully you guys are doing well out there. Apple reported their Q2 numbers, and I'm seeing during the regular session, this stock was up 4.5%. After reporting the numbers, down about the same amount, between 4 and 5% is what I'm seeing. We'll talk about this from a technical perspective. This is pulling back into a range that we talked about last week on our FANG Stock Recap show, where every Friday we recap Apple and all the other FANG stocks in terms from a technical perspective. And we certainly anticipated this move continuing to go lower with Apple. We'll talk about that more on today's show. Now, obviously, this comes on the heels after the company reported their Q2 earnings after the bell. Revenue came in at $97.3 billion, not 97 million, $97.3 billion. That was 8% year over year growth. And they beat expectations by, just $3 billion. We'll come over to the numbers. We'll show you the $97 billion worth of revenue. We'll talk about the gross margins, the profits, the different business units, the cash flows, the services segment. I tell you what, when Apple starts going down, I actually start cheering, because as you go through these numbers, this is definitely an investment that you want for the longer term. Now, I think some disappointment here, okay? They raised their dividend by 5%. When we walk through these financials, they could have easily raised it 10%, 15%, quite frankly, maybe even 40 or 50%. They could have raised this dividend by a lot more, but you are getting 23 cents per share. From a yield perspective, it's basically nothing considering where the share price is. This company could be paying you way more. Now, what are they also doing with that capital? They increased their buyback by $90 billion. I'll show that to you on the cash flows. It's unbelievable how many shares Apple buys back just in a quarter. At some point, you got to figure that's going to pay off for a shareholder. Obviously, it has when you look at the performance of the stock. We'll take a look at some revenue estimates as well when it comes to Apple. The fact that they just printed a quarter of $97 billion worth of revenue. Again, that was a little bit over street expectations, but for the most part, Wall Street has kind of like mid-single digit, like 5-6% year over year revenue growth outside of the all-important fourth quarter, which they expect to maybe go to double digits or closer to 10% growth rate. For the most part, Apple's analysts are pricing in relatively mediocre growth. Okay, obviously, when you get to nearly $100 billion worth of revenue in a just a quarter, not a whole year, I want to remind you, these are quarterly numbers, $97 billion worth of revenue. Obviously, it gets harder and harder to kind of have a high growth rate on that, because then you're just getting to an even bigger number. But that is some upside with Apple, is the fact that the valuation of the company is based on mid-single digit growth rate on that revenue side. And then when you go over to the profit side, paints a similar type story. There's some quarters mixed in where analysts expect profit margins to go up or EPS to go up about 10% year over year. But for the most part, you're looking at single digit growth. If Apple were to come up with something, a new product, maybe an acquisition, maybe the combination of both, that would re-accelerate the revenues, combined with the buyback that you have with this company, and the shares would go much, much higher. That is the absolute bull case argument when you look at Apple, considering it's worth $2.5 trillion. Obviously, you're buying the stock today at about $156 per share. You're hoping that this doubles over a period of time, maybe 6, 7, 10 years. Well, they need to get to a $5 trillion company. They're not going to get there very quickly, growing kind of mid-single digits. So your bull case argument is they're somehow going to leverage this balance sheet or lever their product line into some kind of new multi-billion-dollar product. Because when we come over here and look at net sales, $97 billion, over $77 billion of that is products. But what is really getting the attention of investors is you had services revenue coming in at $19.8 billion. You're at $16.9 billion from a period ago. It's amazing when Apple has $77 billion worth of product sales, we come to this 19.8 line that actually has us more excited than the 77. This is a spoils of riches when you look at a balance sheet or a statement of operations like we are looking at Apple. And I'll show you why I'm looking at that services line. Look at the services cost. So this is the cost of these sales up here. We come down here to services. Take a look at this. We went from $5 billion up just $400 million. In fact, a little bit less than $400 million up to $5.4 million on those services costs. But look at our revenue jump. Okay, we went from 16.9 to nearly 19.9, and our cost grew just almost negligibly. That is the excitement that I have about that business if they can continue to have this type of growth rate. And I believe that the margins will stay about the same. Well, I tell you what, this company is really, really in for some fantastic things in the future. Total cost of sales, $51.5 billion a year ago, up to $54.7 in the most recent quarter. So you take this 97, you minus off 54, and you get your gross margin of $42.5 billion. Apple's gross profit is bigger than basically 99% of the companies in the universe on a quarterly basis, let alone a full year basis even. It's just absolutely amazing. Now, they have some other expenses, but this company runs very well. Okay, you always see Tim Cook kind of wearing the same thing. I think he runs this company like he runs his wardrobe. Very simple, not aggressive, not egregious, and just absolutely run to perfection. You went from 10.5 up to 12.5 on those operating expenses. So you take 42 billion and you minus off 12.5 billion and come down to operating income at just south of $30 billion. Last year on a quarterly basis, you were sitting at 27.5. You come down to net income and you print 25 billion. $25 billion to that net income side, and you see the evidence of the buyback, which I'll show you from a dollar perspective when we get down to the cash flow statements. But you went from 16.9 down to 16.4 outstanding shares. Certainly will help you as a shareholder going forward as you own a larger piece of the pie, as Apple uses their cash and their free cash flow to simply buy back the shares. Now, in terms of this different business segments, they've got America, that's growing, Europe still growing, China still growing, Japan is flat, rest of APAC down just slightly. In terms of their product mix, iPhone is up nicely, Macintosh computers still doing really well. Okay, you went from 9.1 to 10.4. The reason why I emphasize that a little bit is iPad actually went down. They went down from 7.8 down to 7.6. Look, the anecdotal research, iPads just last a long time. You can have like the same iPad for a really long period of time, and so that is why we see maybe a little bit of a flattening there. Whereas the Mac, it's really impressive. They made a lot of innovations on the Mac in terms of the chipset and a lot of improvements, quite frankly, in that business unit over the last year or so. It doesn't surprise me that you continue to see an acceleration in those revenue growth. Wearables up about $1 billion. And again, that services business, whoa, 17 billion up to nearly $20 billion. If you keep seeing that type of acceleration, which you probably will as you get these product sales, obviously people migrate into Apple services, which they just continue to roll onto the company. I hope they just continue to be aggressive on that front. That business model is just looking absolutely fantastic. You come down here to the balance sheet and it doesn't, this looks better than the United States government, really any sovereign government in the world, quite frankly. You've got well over $51 billion worth of cash. What's interesting about Apple is they have some current cash. So up here is where usually most companies keep their cash. They have it down here in non-current assets. I'm guessing this is some banking agreement that they have, because when you come down to long-term debt over at Apple, a lot of people are really surprised by this. This company has over $103 billion worth of debt. It's down slightly, and they have another $9.6 billion of it up here as well. So they've got well north of $100 billion worth of debt. I showed you that they have a little over $51 billion worth of cash sitting over here. They've got another 20.8 in receivables. We see that inventories tick down a little bit. Always interesting when you're looking at a company where the vast majority of their sales kind of comes from a product, to see inventories tick down in the upcoming quarter. That's not necessarily a bullish sign for upcoming quarters, because you would expect maybe Apple to be building up inventory in order to meet demand for the upcoming quarter. Keep in mind that these financials are of March 26, 2022. So we're looking like 3 months back. So when they don't have as much inventory, it sometimes paints the picture that maybe demand is starting to wane, but always compare it to the period ago. We are looking from September 25th to March, you'd expect Apple to build up their inventory in September because October, November, and December are the key holiday periods. So they would tend to stack inventory in this period and probably have a little bit lower inventory in this period. What I'd like to see Apple do is maybe another column here. You can obviously pull this up yourself. You pull up Q1 earnings from last year and you look at the year-over-year inventories. It might give you a little bit of a clue into how Apple feels about subsequent quarters on the horizon. But to finish my point, they have another $141 billion worth of cash sitting down here on non-current assets. This likely means to me that these marketable securities are set aside as a non-current asset. They couldn't necessarily go make a big acquisition and close on that with this cash, likely because it's tied to this massive $100 billion debt that the company has sitting on their balance sheet as well. From a cash flow perspective, this is where it gets even more exciting with Apple. You pull down this fantastic net income number for 6 months at nearly $60 billion. Previous 6-month period, you were at 52.4. You get to add back in things like stock-based compensation, which I've looked at many companies over the last couple weeks, and for some companies, it's a nearly 1-for-1 stock-based compensation to net income. Well, with Apple, they have about a 10% ratio. Actually, it's less than that. Off of $59 billion, you paid $4.5 billion worth of stock-based compensation. Obviously, a hefty amount from a dollar perspective, but compared to net income, this is far less than when you go look at a Teladoc or a PayPal or those types of companies, even like a Boeing. So they're doing a nice job in terms of controlling that as well. You get to add stuff like that back in on cash flows, and that's what makes these look even more impressive. Take a look at this. Off of $59 billion worth of net income, it was $75.1 billion of that was positive cash flow. You're sitting at 62.7 a year ago, and we thought that was amazing. Well, we bolted on nearly $13 billion more worth of cash flows over just the last 6 months, which is unbelievable. It's nearly $2 billion a month. From a financing perspective, they did repay a very small amount of debt, but here, look at this. Repurchase of common stock, that's $43 billion of buying the common stock just over the last 6 months, which is just absolutely impressive. In fact, they're on the exact same pace that they set last year at this time as well. They did pay some dividends as well, about $7.3 billion. All things being considered, over the last 6 months, Apple has spent $50 billion on shareholder-friendly things like common stock buybacks and dividend payments. That's off of $75 billion worth of positive cash flows. So nearly 2/4 of the cash flow is going to shareholder-friendly things. This is why we've recommended buying this stock for a very long time, because not only do you have some of the highest revenues, you have some of the highest gross margins, you have some of the highest profits on Wall Street, but they reward the shareholder by taking about 2/4 of that and doing things like buybacks and dividends. That being said, I think they could have raised the dividend by a little bit more than 5%, but we'll give management a pass, at least for this quarter. Now in the after hours, we're seeing this stock down about 4%. It was up about 4.5% in the after hours. All things being considered, the stock is in a pretty tight range over the last 24 hours. We've talked about how the stock made some highs back here at the end of March and is just subsequently just continued to give them back. And right now we have no reason to believe that this downward trend that we're making, not only kind of in this shorter term basis, but also this kind of intermediate longer term downtrend since the beginning of the year, all of this stuff is still intact. My opinion is Apple gets back into this channel that we've been in for the bulk of this year. We pull back into this channel. As Apple pulls back down to the bottom of this channel, I think we'll make new lows for this stock at the year, which currently are about $150 per share. I think Apple probably pulls down and at least touches those. And if they break through it, in my opinion, there's a fantastic buying opportunity for Apple. There's a natural area of support down here at $138 per share. And if I put my tinfoil hat on and bring out my crystal ball, I'd actually guess that this stock will probably pull all the way down to that level. I'm not saying it's going to happen in this quarter, not necessarily in Q3, but by Q4, it wouldn't surprise me if Apple comes back and just retests this 138 level. That's why as this stock pulls almost back. I wouldn't necessarily do full allocations. It's just going to be gentle buying of this, gentle adding to the position. Apple, quite frankly, is my largest position, especially when you factor in probably Amazon's drop tomorrow. They kind of flip-flop in terms of which company I own the most of. I would imagine after Amazon's drop, it will be Apple. But as Apple continues to work back, I would be excited about buying this stock. Number one, you've got those massive buybacks. You've got increasing dividends, especially if you're going to hold this for a long period of time. Those growing dividends will help you in the long term. And then this services segment. These are fantastic. I think product sales are going to slow over at Apple, but these services are going to continue to expand and they're going to make a lot of money on that. And then finally, the earnings estimates and profit estimates are mid to single digits if this company decides to get aggressive over the next 12 to 24 months, maybe make an acquisition, maybe launch a really aggressive product like an autonomous car or something that they have up their sleeves that we don't know about yet. Well, all of a sudden, this year-over-year growth rate would start to reaccelerate. And quite frankly, I think that's what it's going to take for this stock to kind of reverse its downward trend that is in and then re-challenge the highs that we have at $181 per share. I don't think that bull case is going to play out anytime soon. That's why I think lower prices are ahead with Apple. But my recommendation is you buy this stock as it continues to move lower, because once those bull case arguments come in, well, this stock will reverse course very quickly and start to trend back in the other direction. Hopefully, you guys enjoyed today's video. Back in soon with more. Good luck with your investments.